Hi dear viewers, good day. I guess live stream setup is done. Let's just check it out a little bit. Yes, I guess the sound is quite good. And we can start. So hey guys, I welcome you all to join our live stream session here today. Now in this session, we used to we usually talk about the previous week's market scenario. And apologies for not letting you guys been shown up in the last 2 weeks. It's because there has been some of my uh, you know travel related issues. I had to move across the countryside a little bit due to work. Now I guess the issues just turn up and I'm back to you. Now, you know we have shared the detail of the link over here, our link tree link. Now from here you can access to every bit of our engagement related to the markets. For example, like on the very first portion here, we have some affiliation on Web3 and Metaverse related projects. So you can click and join through us over here if you want to expand your Metaverse affiliation network. Now, to directly connect with me and Tripplepips admin team, you can click all these links. Especially if you click on the Telegram, it will show up you up over here in our Telegram group. Now, if you want to attach your LinkedIn channel, you can go there. So, any of your preferred social media contact you choose, we have over there. And also, moreover, the important thing is that we have a virtual office. If you click this link, it will redirect to here our spot over here. And through here, you can access and meet many other traders and all our video sessions, so that we all can be on the same page and can discuss market related events and different issues. And for training related contact, you can click over here, because here I conduct some courses from Forex Wave expert team with Forex Wave expert team. And here are our socials, so you can go click with it. Now here you can see our earning programs. So there are some suggestions on a doc file. For any kind of development you want to do with it, you can actually contact direct me. And we have some prop firm affiliations. We have put the links over here, and also derivatives trading broker related affiliation we have with some, like Advantage Markets, Multibank FX, and XNES. And for digital asset management, you can also click over here. So these are the links that are associated with us. So if you are a new trader or even a very experienced one, you can actually get in touch with us through these links. Now let's get back to our today's discussion, that what we want to discuss on today's market. Now let me have a open the app first, because if we want to start discussing on how the market would be, we also have to open the charts first, so that we can have an idea that how we are seeing the market. Now, before hopping on to the charts, I would like to show you how the impacts of the previous week's news were. Like say, for example, on Monday we have BOJ, Bank of Japan Governor Ueda speech. So on Monday, on November 6th, let's just say for any kind of like USD JPY pair. Yes, for example, on this day, November 6th, and on the very first Asian session, we have some news. And after that effect, on that particular day, Japan yens got weaker, and not only that, it continued throughout the whole week, which made USD JPY a sharp bull run from the level, let's just say 149.4 up to 151 level. Now, previously, if you guys follow our videos, we actually what we do is that we identify significant liquidity levels and want to show you the insights of what actually happens if this liquidity levels breaches or something like that. Now, when the market for USD JPY was something boxed in this zone for let's just say 4 weeks, then this thing happens. It broke the level and reached a new high. Now it didn't actually broke down to the new low, but it created a good support from this level, which is 149.5 zone. And now we are saying that the weekly close happens on 151.5. So whatever the decision on this that news occurred, it actually been affected very negatively for yen. That what we can say according to the chart. Now we had construction PMI news on the same day for pound, which appeared a little bit, you know, negative than expectation, but it was positive than the previous value. So let's see how pound reacted on the same day. Now on the 6th November, on this side of the market, I guess we had some news on pound, and after that, I guess we had a good bull run of 50 pips or something from the Asian session, but later on it just degraded, and a weak pound established hold throughout the weekend. The only thing positive for the pound was on the 6th November after the news, and after that, everything that happened on pound was negative. Now let's get back to the next day on Tuesday. Australian dollar cash rate and RBI rate statement was published. Now we will hop into that rate statement a little bit later on, but let's just look on how that it affect the market. So this day is November 7th. Now after the Australian dollar RBA Reserve Bank of Australia monetary policy cash rate news, we have seen a significant downfall for Australian dollar against USD, and such bearish tone for Australian dollar has been predefined by the Reserve Bank, and we will have a look onto that a little bit later on. Now, on the same day, we have FOMC member Waller speeches. The next day, on 8th November, we have inflation expectations for NZD, which appear a little bit negative. Now, for such kind of negative approach, let's see how market behaved on the day of November 8th. So after the news been released, and a little bit, the value was a little bit down. So we are seeing a not more than 34 or 30 pips downward movement from the high on that particular day. So I would like to say a not that much significant movement that could have been expected on such important news. Now we had pounds Bank of England Governor Bailey's speeches on the same day on November 8th. Let's see how GBP USD reacted on the day. Now on November 8th, when we had the news from the Bank of England governor, we are seeing the same kind of like 40 or 45 pips upward movement, but that's it. I guess it was kind of like sideways movement for the main downtrend that had been occurred in the previous week, and after that it stabilized, and then after the next day session ends, it went again kind of like bearish. So I guess for pound, the speech created some positivity, but not that much strong. That's why it happened. On the same day, we had Federal Reserve Chair Powell's speech for USD. Now, if we can have a look on the gold on 8 November, we will see a kind of like sharp decline and sharp, strong US dollar related movements in the market. And for that, we have seen kind of like 100 plus pips movement happened on gold on that particular day after the news been released. So it was very impactful. But the next day, the move actually it got a little bit, retested, and we had seen that the next day there wasn't any kind of candle being closed above the, news release candle, which was on 1966.7 level, I presume. So as it didn't happen, so the market actually, go on the bear side on the Friday, as we were seeing, the whole day, like from 1959 levels to 1937 level. So kind of like huge drop on gold happened when it tested the supply zone over here that create you know and that zone created just when the Federal Chair Powell's speech happened. Now on Thursday we had Chinese CPI news which appeared to be negative. Now when that happens, we have to remember one thing, that when China's CPI interest rate expectations is diminished and it affects kind of like negative for China, then must have to be, it needs to be kind of like put some positive effect on dollar on November 9th. So that's what we have seen the whole day. On the Asian session the dollar was strong, but suddenly on the pound session it went up. And why? Let's see. Because we have seen some you know less unemployment for from the pound side, and we had ECB Lagarde speeches on the same time. So that actually pressured the market into weaker USD expectation that created kind of like bullish movement for gold over here. And if we see for NZD USD, it was kind of like sharp decline and sharp demand for USD on that particular date. Now let's hop in to what's coming on the week next. Now we already have published this insights over here in our Telegram group. So if you don't want to miss anything else later, please join our Telegram channel. And for obvious reasons, there are many more channels to follow up. So just follow these links, and the link to link has been on the description of this video. So I guess if you follow that, you can reach us. Now on the Monday, November 13th, there will be Chinese new loans and Canadian bank holiday. So we will see some. We are expecting some good you know decrease of demand for Canadian dollars. Let's just say if that happens, then Canadian dollar will be weak, and for USD CAD, we guess USD CAD will be experience kind of like bullish tune if US dollar has some good point on gaining strength. Now on Tuesday we have claimant count change, which is a kind of like employment news for pound. We have uh, Central Bank of Switzerland (SNB) Chairman Jordan speeches on the same day on Tuesday, and we have one of the most important news of the week, US dollar CPI and core CPI news gonna release on that particular day on Tuesday. On Wednesday, we have retail sales and PPI news for US dollar and crude oil inventories, and also we will see GBP CPI and wage price index news for Australian dollar. Now on Thursday, we will have employment news for Australian dollar and unemployment news for US dollar on that particular day, as well as USD industrial production related news. Now on Friday, we have GBP retail sales. We have Chinese foreign direct investment report on the year basis. We have ECB President Lagarde speeches, and we have building permits news for US dollar. Now, as we are speaking, so these are the facts from the forex factory news. And why we are telling that this news is one of the most important news of the week, because this will create kind of like effect on US dollar in terms of other major currency who are concerned about the current global condition related to business and geopolitical aspects. So that's why this news is very important, because there's only one another month, last December is happening, and everyone knows that in December, from like let's just say 15th or more like 20th, this from December 20th to January 10th, everything remains kind of like closed or like gloomy, and also everyone is on the holiday mood. So for obvious reasons, the economic activity in a sense bolsters, but many other side of the economy activity remains kind of like stagnant. So that's why shifting and contractory measures been happen. So we don't know how the CPI will affect these kind of contractory measures, because as we can see that the previous value was 0 0.4. The forecast is always been less than to 0 0.1. Now fact is, if the value becomes 0.2%, then sentimentally it is more than the forecast, so it will show positive sign. But in the broader scenario, it was less than the previous value 0.4, right? So for that cases, we will see some harsh movement and spikes on both bullish and bearish sides of the USD. And we will have industrial production news on the Chinese side. That's also an important news, because this if this production increases, it's will be kind of like boom for Chinese economy as well as Asian markets. But if it lessens, then I believe that it will be a kind of like positive for US dollar, but it will be negative for China and the Asian markets. For CPI, we already have seen some negative employment reports from the pound, like from 6.7 to 4.7, like 2% decrease. So 2% decrease in numbers can be seen as very less, but my friends, it's a huge number if you just compare it to the economy related to kind of like size of a UK, right? So 2% contraction on CPI news on the year-to-year basis is a very kind of like vital forecast, I guess, we are having for GBP. But if according to the forecast, the value lessens, then the pound will actually decrease a little bit, lot more. Now we will actually evaluate how long it can have the room to have some downfall momentum a little bit later on. Now that's what we can see over so far from the next week news. Now we have identified some of the articles where I guess we will discuss before hopping into the charts. So I just for reference, I use AI to summarize such prolonged conversation, because it not only helps time, but also it helps understand how the main key points are, and also it helps me understand very specifically that which portion of the whole article I need to very put emphasis on. Let's just say from the article, we are saying that US inflation has decreased over the past year, but it's still above 2% target. Now, after the COVID effect, the inflation hit a lot more higher. Now, on paper, maybe the in the inflation rate is kind of like less, but in the real economy, the rate is much more. Now, if Federal Reserve tries and even get succeed 2% target, but in reality, it would still be like 5 to 6% due to many reasons. Now, over the same article, the Federal Reserve has put their concerns on the labor market remains tight, but the supply of the labor have some improvement, and gradual easing in demand continue to move in a better balance. Now, GDP on the third quarter was strong, and growth is expected to moderate. Moderate means when central bank says moderate, that means it will get low. Now, central bank can say low, because when they say something and define it as low, people got panicked and they just short sell all the things out. Now, to reduce that, they actually use many verbal techniques. Let's just say expected to moderate. That means it's a good low. It will become kind of like the growth will be low, but it's expected and it's good for the economy. Nothing to panic. That's why they are emphasizing kind of like this kind of sentence and words in their statements. Now, FOMC is committed to achieve a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. Now, that's their all of a target is. Now, uh, after running below 2% over the first year of the pandemic, core PCE, which we call it as personal consumption expenditures, inflation rose sharply in March 21. Now, pandemic-related shift in the composition of the demand, the disruption of supply chains, and sharp decline of labor supply is one of the things that we should all be, consider, because if the labor supply, increases, then there is a shortage of labor, right? Now the labor supply declines. That means sharp decline. That means there are jobs, but there is no sufficient labor, right? So this is kind of like very much cautious issue. Now in the fourth quarter of 2021, the data clearly changed amid waves of new COVID-19 variants, with only gradual progress in restoring global supply chain. So that's the uh, you know kind of like general emphasis on the article. Now, China activity data plus growth from Japan. So Asia, if the industrial report from the uh, Chinese side increases, then Japan will also be benefited from that partially. Like for example, for Australia unemployment, full-time employment declined by 39.9K and part-time employment increased by 46.5. Now we are expecting some of the full-time workers lost their job, take on part-time jobs temporarily, but some part-time workers to convert in full-time position. And Japan will be releasing the third quarter GDP data, and it will kind of like expected to contract like minus 0.1% on QQ basis. Now Japan is likely to record a deficit in October 2 on trade balance, and we are seeing that okay, that's the thing that we need to emphasize from that article. So from the European Central Bank, there's been an article, the spillover to the euro area from recent negative inflation in China. So the a surge in past 2 years, euro area import prices have declined in recent months. In June 2023, annual euro good import prices declined by 14%. So yeah, so we are seeing some good price drop on euro, and that's been Chinese producer price inflation has been a downward trend since peaking on the last quarter of 2021. So the normalization of Chinese producer prices has helped to lower euro area good import prices. So euro is now having some good advantage on importing things from the China, whereas we all have to know that China is right now the world's biggest debt collector, and there have been majority of the country that China actually got involved and provided debt is in very deep crisis. Like we can name many from the Africa, from the Asia. We can name Sri Lanka. So this has been more kind of like a very cautious thing from the IMF in a very very recent time. Now let's just hop into the RBA. Uh, the Australian and New Zealand dollar were heading for a fifth session of lows on Friday. Now, a hawkish sounding policy outlook from the Reserve Bank of Australia offered the Oz a little support as investors are still pricing in scant chance on actual hike in rates until February at the earliest. Now, though the policy looks a little bit hawkish, but we have seen some sharp decline because the investors are actually relies on the actual hike in rates, not just some expectations or positive reports. They are clearly onto the actual hike in rates in numbers, which I guess can be possible until February. That's what the article says now. Kiwi dollar was down 1.8%, and you know there's another point why US dollar actually rose that much, and Aussies and NZD have some sharp decline. The US counterpart got a lift from a rate warning by the head of the Federal Reserve, along with a poor 30-year US bond auction, which sent treasury yields sharply higher. So these 30-year US bond auction actually has put many impacts on Australia and New Zealand economy, because New Zealand being the supplier of global leader on the supply of dairy related products and many other minerals, and Australia is also a kind of like global leader on minerals and mining related products, especially gold. So for them this kind of bond auction is very important, and that's why we are seeing a very high demand from Australian dollar to US dollar. last week, and that causes the sharp decline on Australian dollar prices as we see on the chart over here. See, the whole week it was down, and the reason we got up to the conclusion is that because of this thing. Now, the RBI also cautioning about upside risk to inflation as it revises a forecast for both consumer prices and economic growth over the next 2 years. Now, they have some quotations that I like to highlight. Like the relatively better forecast on growth and unemployment suggests that cash rates will also keep be higher for longer. So they are eyeing on maintaining a high cash rates so that they can also maintain and have many rooms to settle up their economy that has been contracted after the COVID issue. Now, in the near term, the balance of risk sits with a higher terminal cash rate than 4.25%. And the RBA is looking for consumer price and core inflation to rise around 1% this quarter. And if inflation expectations fall quickly enough to allow RBA to cut rates by 75 basis points in late 2024 and for further easing 2.8% by mid 2025. That's what they're eyeing on. That by the way, and the policy they're actually right onto it. Through it, they can cut the rate by 75 basis points at a glance in the late 2024 to their expectation, we can say on the last in between any last 2 quarters of 2024, and further easing if that actually works by mid 2025. So we are seeing some good Australian dollar negative vibed movement and no certainty on hiking rates in numbers. So that's why it actually created a huge downfall. Like say here, we are seeing statement of monetary policy, like they have showed why they actually put these kind of decisions, and they have expressed their concerns about on the many global issues. So I guess it's a must read for anyone who wants to have a hop in to know about Australian economy and their monetary policy. Now, though federal officials say they might raise rates again, market participants aren't buying it. Now, thing is that after the Powell speeches, they're not buying the Powell speeches, but truth is they're buying the 30-year Treasury bonds because by any means, I guess Federal Reserve has an eye to increase the contractionary measure in coming days to check the inflation that they're having right now. Now, traders were still seeing the pricing in a 15% chance that Reserve will raise rates next month. Only 15%, not even above that. Now, 23.5% traders see a chance of hike on January. Now, traders are expecting kind of like a rate hike possibility, kind of like a little bit late, not in the recent 1 or 2 months, just because they also feel that the Federal Reserve need to attain what the recent hikes actually been offered in the market and stabilize it, and then move another rate related function. Now, what we know from my previous experience, Federal Reserve has a very less patience in terms of fixing these things because it has some complex structure on layers and layers of bonds and institutions that actually provide the security of any money and the bonds been provided from the Federal Reserve. So these kind of transactions and this kind of involvement where there will be global participant from the many important and influential parts of the world. I believe that the USA is now thinking to contract their economy in a good sense, and also to reduce the wastage of the money. So we have seen that on the Trump administration, they have lowered their costs in the UN and many other organizations, and through it, they already had been on the contraction economy side. Now, what we are seeing that the Biden administration is going to adopted it and wants to escalate it in a way that they also been in a position of benefit. Now we will see some China news, and also we have some breaking news on China that the Biden and Xi make it official that U.S. Chinese leaders will meet next week. So it's a photo from 2022, and a lot of changed, my friend. Right? It was on the G20 summit in Bali, Indonesia last year. Now, after a year, I guess Biden and Xi is gonna, meet once again, and the special agenda that's gonna be discussed is that how they can continue to responsibly manage the competition or work together where their interests align, particularly on transitional challenges that affect the international community. Now, if we just emphasize on just one word in this article, it is transitional challenges. Question comes that is it related to like what kind of transition it can be? Why it's kind of like challenge? Why there is a need for such transition? And even if the need is justified, then how the transition is gonna happen? So a lot of people have been, talking about crypto, blockchain related economy, Web3, and many other stuffs. And see, the future economy has been relying on totally on digital economy. Now, are they referring to that kind of transitional changes and its challenges, or they're referring to BRICS? Because we all know China is also a major part and partner of the BRICS related monetary policy policy related groups. So for obvious reasons, U.S. and China will be talk on the APEC summit, and I guess we will have to look what that meeting came up to. Now, sorry. Now there has been a recent liquidity quiz on Chinese markets, as we can see, and there's been a high amount of short-term borrowing funds request from the China's small business. Now, thing is, the demand of the short-term fund borrowing has been ramped up, but not everyone was entertained by the Beijing because there has been a squeeze on liquidity on many terms. Now that's why the Xi and Biden meeting is very much important because sorry, without these kind of meeting, these policies and how it turns up to cannot be cannot be measured. And we can see that in October, China's central local government sold debt at the fastest pace this year, according to Bloomberg's calculation of official data. And a rare media revision to the fiscal budget allowed authorities to sell 1 trillion won of additional sovereign bonds to support growth in 2023. So the central bank will likely to reduce the reserve requirement ratio by 25 basis points to add liquidity by the end of the year on the Chinese side. Now, as some liquidity contraction been happening over there, I guess that there has been some liquidity crunch, and you know they are still on the early stage of liquidity because if we talk about China as a country, as people of a huge population and very workaholic population, and along with it, we are seeing that they have they have been a supplier of various kind of day-to-day related goods, not only in the personal related side but also industrial side. So these kind of 25 basis points liquidity is a huge in numbers that we're talking to now. How US dollar as a reserve currency and international trade currency can support that? That's the question that I guess need to be on the table on Biden and Xi. Now, I'd like to, put some of my chat GPT related summarization technique over here. Let's see how it comes. Article and highlight important sentences in bullet points. So in the meantime, it's been preparing all these things. Let's just hop back into another news. So from forex.com, we are seeing some price related targets for US dollar for price charts. For we are seeing Euro USD, and on the daily chart, we're seeing some trend line breakout on GBP USD daily. We are seeing a breakout on USD CAD weekly charts, and on the short term, we are seeing some retesting happening on these zones. For gold, we are seeing kind of like a sharp decline on the weekly chart, and from the daily, we have also seen we also saw some decline structure on the past week, and okay, let's just see how my AI reports. Okay, the recent dollar fluctuations seem tightly linked to U.S. rates. The Federal Open Market Committee and October job reports saw two-year Treasury drop 17 BP, and the dollar was taken broadly lower. The FOMC is committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. Now, in the fourth quarter of 2021, the data clearly changed amid waves of COVID-19 variants. Now, the core rate continues to be sticker. The median forecast of Bloomberg survey is 0.3 increase. Okay, now consumer spending rose by 4% in quarter three, so the spending has been increased, and the retail sales has been expected to fall for the first time since March. Now, Moody's cut the U.S. rating outlook to negative. That's a very crucial thing to consider. And without slowing U.S. consumption, the dominant economic slowdown narrative, which has fanned speculation in the Fed's fund futures and swap market that the Fed will cut three times and maybe for next year, will be called into question. Now, cutting rates is on the table already because the inflation has been risen so high, and to control it, the central bank has the power to cut the rates in some cases. Now, for that happening, so what will happen? Let's just say, like for example, gold. As we're seeing some crucial momentum happening on the gold market on the last week, we can say that for the gold market, it's already been below the contraction zone, I say. So I believe that at least it has the capacity to move more, kind of like 618 points, and at least up to 81875 on the next week. So let's just mark it up. Oh my God. Okay, the sell sign has been so low. So it's better. I can, yeah. Okay. So yeah. So we can say at 81875 could be a level that we can consider on the further downside of the tone, like over here. Now, furthermore, we will see a level over here on 1815 or 1810. So these are the two levels that we can hope for go on the next week for gold. And another is 2005. Like for example, if it exceeds 2005, then there is a high chance that it will surely touch 2050, or let's just say 206 levels. Moreover, 2075 levels. So thing happens is that there's a chance that the price will hop in, go kind of like downward, and then move up, or it will go more down up to 1803 levels. Now, on the other side, if the price just go up in and somehow closes any H1 or H4 candle above this level, which is 2005, it will surely touch 2075 levels above, or moreover to this 100 level. That's what we can say for gold. Now, for Australian dollar, as we can see, some bearish stance happening. There is a bearish liquidity been over here and over here, and moreover, if we can have a look, we have bearish liquidity over here up to these zones, and moreover this zone. Now on the alternate side, if you see about what bullish liquidity, now last time bullish liquidity been retracted is from here. So any H1 or H4 closing above this level is will surely tends to go a bullish direction for Australian dollar, whereas according to our watch, there's a high chance that it will go straight out of break this level, and at least it can touch 0.622 levels over here. Now same thing goes for NZD USD too, as the bearish momentum been continued. I guess there are some liquidity levels that needs to be respected on the bearish side. So that's what it's gonna fail first, and after that, if there is any chance that it can, uh, you know, it can close any candle H1 or H4 above this level, which is 0.599, which is 0.6 level psychologically. So I guess then it could be go a little bit bullish side up to 0.61 or 0.605 level. So let's just hop in for USD CAD. Now we have seen that USD CAD had maintained these kind of like zone related movements over the past weeks. Now this was actually our zone. When it was refracted, it go there and then again there, and then it comes here, gained some good demand, and then again went here. Now thing is, if by any means we see some of the bearish movement below this level, which is 1.365, we can say that there is a high chance that it will go more 150 pips downwards up to 1.3496, or furthermore 250 points up to 250 pips below up to 1.34, if by any chance Canadian dollar gets stronger. But if the strong US dollar and weak Canadian dollar scenario continues, and by any means the USD CAD closes above 1.39 level, then we can say we have a room to grow up to 1.405 level, which is 150 plus pips above from our expected entry price from 1.39. So on the buy side, we are seeing some opportunities in sell as well as on the sell side, and we have informed you on the both. For GBP, if the you know if the bearish side continues, then I believe that there is a high chance that it will uh, you know create and break these support levels and go at least up to 1.2 level, if If by any chance an H4 or H1 candle breaks below 1.22, which it didn't happen, last week, but if it happens, then I guess it has a chance to go up to 1.2 levels. But on the other alternate scenario, if we can see some H1 or H4 closing above 1.24, then there is a high chance that it will rise 200 pip more up to 1.26 levels in the near coming days. Now for US 30, we have seen some like kind of like bullish momentum been happening on the past 2 weeks. Um, and on the daily chart, we are seeing some positive side, and it broke the last week. It actually broke the previous month's high, and these bearish liquidity has turned bullish liquidity. And if it happens successfully, then I believe that there's a high chance that the market will reach 35,000 level, whereas the market is right now 34,300 level. So we are eyeing on 700 points above than the last week's closing. And alternatively, if we see some spikes and we see some closing below 33,000, let's just say 500 level, then we can say that we will have a bearish, uh, you know, expectation up to 32,500 level, or so let's just say 33,000 level, 500 points below than that. So that's what actually we are eyeing for US 30 in the upcoming week. And we have expressed our concern for gold, for NZUSD, for AUDUSD, for USD CAD, and I guess for USD JPY too, because for the past couple of weeks we have been telling you repeatedly that this level was very kind of like important. Now when it actually broke and actually retested, then there's a high chance it can go more up. At least we are seeing 100 pips and the room is actually possible for USD JPY if more contraction in Japan's economy continues and US dollar becomes more stronger in the coming days. Only in that case